My friends, welcome back to the channel. I apologize for being gone the last couple of weeks. I've just been really busy and focusing a lot on the Discord and just, man, I got off schedule. No excuses. But we're back this week. We got a big day tomorrow. I want to touch on the FOMC meeting, what I'm expecting from the Fed, what that potentially could mean for SPY in the overall market. And then I want to quickly touch on what happened with GME today because obviously they smashed earnings. It looked great. I'm so happy for you, for myself, for anybody that has been a shareholder and has been, man, we've been getting punched a lot here lately. So today felt real good. It felt like a solid win. So we'll keep it as short as we possibly can, but I want to go over all the information. So I appreciate you tuning in. Please, if you haven't done so already, follow me on Twitter, Colin_Gladman. Easiest way to keep up with what I'm thinking throughout the day. If big news hits, anything along those lines. But I appreciate you. Please like and subscribe. All that good stuff. So having said that, let's jump over here to the futures chart first. So overall, this move looks really strong. Okay, we've had a lot of strong pushes up because of the Fed talking about the recovery rather of the banking structure and system. The Fed has been talking about how they feel like the banking system looks strong, which I'll get into that here in just a second. But overall, we had a nasty scare with all these banks. I don't know that I believe that personally it's over. However, if they're coming out and saying it's stabilized and looks good, then the market's going to react to that. Let me put it that way. So the only thing that I really don't like about this move is anytime we got these massive push-ups and the volume is declining the entire time, that is always going to be massive red flags. Now, the good news is you're on top of pretty much all of the major EMAs. We found support on the 200 moving day average, and now you're on top of all the EMAs. And then today you pushed above the 200 EMA. Like I said, biggest red flag is going to be the fact that this volume is dropping off the entire time, which makes a lot of sense because you're going to have a lot of big players that are going to be sitting on the sidelines that are going to be waiting for the Fed decision. So it is an anomaly. I don't like it, but it also makes sense. If this move was just happening and there wasn't like a good solid reason for a lot of big money to be sitting on the sidelines, that would make me quite a bit more concerned. So I still don't love it. You always want to see effort, meeting result, if you will. So if you got a lot of volume, you want big, nice, widespread candles. If you don't have a lot of volume, you want those spreads to be nice and small. So especially like today, where it pretty much pushed up all day today. Now, it was definitely flat. There was a time on SPY today where it was like I felt like every time I looked at it, it was like in the 396 range. But overall, pretty much pushed straight up today. But like I said, volume declining the entire time. So not the end of the world, but definitely not what you want to see to be super bullish. I have been, if you followed me for any amount of time, I am still overall very bearish on essentially the macroeconomics, the tensions as far as potential wars that are going on with like China and Russia, that escalation that's potentially going on in there. Plus, I have been saying for I don't even know how long now, but the Fed and the market have been on a strong collision course, if you will, head-on collision course, and I believe that time we're gonna find out a lot tomorrow about whether or not the Fed blinks or backs off, if you will. And if the Fed does, blink or back off, then you're gonna see the market react, and we're gonna boom. If the Fed holds the market feet to the fire and really stay strong about their inflation thoughts, which I believe that they will, then I think you're going to see the market react. I think you're seeing these pumps. You got guys like Bill Ackman and Elon out here saying, oh, the Fed needs to cut 50 basis points and they need to have done it last month. So I think you're seeing a lot of that sentiment going around, and I'm genuinely worried that a lot of people are going to get caught up in exit liquidity here, which means a rug pull is going to be coming. So what I'd be looking for, On futures is the 618, so right around 40.67. You can see it was a clear kickoff point here last time, and it was clear support back up over in here. So that's the next real big test, is if futures can get above that, then that's going to look pretty solid. But the reality is until we have a good clean break of structure, if you will. So essentially we've been in a series of lower lows and lower highs. So until you definitely make a good solid break above this 4080, if you will, which was this peak right back in here, and overall the structure is still going to be bearish and downwards. So that's the main thing I'm going to be looking for, can we get a break of structure. So if we go over here to SPY, it's kind of the same thing. You did get rejected right off the 200 EMA right here at close today. So not a great sign. However, once again, on top of the 200, the 921 is going to be curling up. Now, all EMA indicators are going to be lagging indicators, but it is a good sign that you're getting a curl up. So this is pretty much what it's going to look like. So anytime you get on top of it and you start getting that curl up, and then you actually get the cross, then that typically means you're going to get some nice solid upward movement. I also tweeted out that back in 2008, in March is, when we had, the incident where the banks went out of business, and then the market actually rallied till about September of that year. So we could definitely be in another one of those situations. As the history doesn't repeat itself, but it often rhymes, right? So that is definitely something to always have, in the back of your mind. So you just want to stay, watching closely on, what is all this volume doing. So for SPY, I wouldn't be surprised at all to see a rejection off this 200 EMA, come back down here to around like 396 or so. I'm anticipating a relatively flat day tomorrow, especially, just like we had most of the day today, leading up to the Fed's, interest rate decision, which that's going to drop first at 2 p.m. Eastern, so 1 o'clock my time, and then Chair Powell will be talking. And that's, so I'm pretty much convinced that we're going to get the 25-point hike tomorrow. I do not believe in any way, shape, or form we're going to get any type of pause or a cut. I definitely think 25 is going to happen tomorrow. Small chance at 50. However, what is going to be interesting is, what does his forward-looking statements look like? Is he going to be incredibly hawkish, or is he going to be incredibly dovish? My personal opinion is they're going to stay overall relatively hawkish from a standpoint of, they're going to talk about a lot how, the banking system was tested. We proved that it was fine. Other than maybe, a couple of bad apples here or there, the fight is inflation. We've got to stay on top of inflation. We do not want, 6%, and then we got to keep, track of all this data. So you do not want, and this is going to be their first meeting since we had previous hot data coming in. So I think we're definitely getting 25 points. Small possibility. I want to be clear on that. Small possibility of 50, and then I think overall you're going to get a hawkish tone from Powell because housing still looks good, jobs still look good, the markets still look good. So he's going to give lots of reasons of why. We had a banking scare, but overall, the market has proved itself to be resilient to that. The banking system's proved resilient to that. So we can keep cranking and keep hiking. So I think we might get an initial drop on the 25. I think it, for the most part, is priced in, if you will. Even though I'm skeptical of the people who always say things are priced in. I do think the market is prepared for a 25-point hike, but I still think you're going to see the people who are hoping for a Fed pivot. I think you're going to see a lot of disappointment there, and being I can't believe they're going to keep hiking up rates even after all this stress to the banks. And like I said, I think that's what's going to happen. So overall, that's my prediction. I think you're going to get a 25-point hike with a hawkish Powell, and the market is going to react poorly to that. Now, if you get a 25-point hike and you get a dovish Powell, where it's like, we might have to think about pausing. If he starts talking about pausing or pivoting, then I do think you're going to get a continued rocket ship. So you'll get some reaction on the interest rate decision, but I think for the most part, 25 is relatively expected, even though it's going to get volatile. And if you're buying options, keep in mind, paying really high IV for those things. But I do think it's going to get volatile, and I really think the most volatility you're going to see is when you get his speech and his statements, and then when he's answering questions. So my personal opinion is he's going to try to walk the market and expectations back, because I feel like everybody's pretty excited right now. So that's my opinion on that. As far as GME goes, so back over in here, and I apologize with my after hours on, you may not be able to see the chart quite as well, so I'll just explain it to you. But essentially, there was a long period of GME just basically bouncing back and forth between 20 to 1950, basically 3 months worth there towards the end of the year, and then it broke down. So GME has not had great luck with this with its 200 moving average, and I'll show you on the daily here in just a second. But I mean, after hours, they're sitting on a ton of cash. They had their first profitable quarter in forever, and so this is what goes back to since APE was announced for AMC. What I've been talking about, how if AMC can raise money and fundamentally prove that they can survive and pay off some of their toxic debt, you are going to see shorts exit at that point in time. I think this earnings definitely caught a lot of people by surprise. I expected a move after earnings. I did not expect anything like this. I was thinking like 1950 to 20 would be tops, and obviously it blew past that. So, and once again, just awesome. And you can see the volume that came with it. I think I saw it was like over 10 million shares traded. So it's just a lot of reasons to be very optimistic. When you look at the volume by price, you can also see that this point of control is right over here, right around 25, when you're looking at this range right here. So it's not surprising at all that between that 200 moving average and the point of control that you stopped here after hours. So that's going to be a big hurdle. And if we go to the daily here, just like the 200 moving average has been huge on AMC, you can see right here that, as long as GME was above it, things were good. As soon as it broke below it, you've had moments of breaking over it very momentarily, but it pretty much just acts like a magnet and just pulls this stock right back down. So it'll be real interesting to see where we open up tomorrow. So also too, on my tweet where I talked about how meme stock runs have typically signaled market tops, that doesn't mean that this run is over. That's not what I'm saying. What I'm saying is when these type of runs, when meme stock runs look exhausted, that has signaled a lot of bad news for the market in general, as far as getting a lot of pullbacks. So that's just something to keep an eye on. And at the end of the day, man, you just got to do what's great for yourself, your family, and your portfolio. But especially if you were a degenerate and played a whole bunch of options before this GME earnings, then number one, God bless you, that's awesome. Number two, please make sure that you take profits. Colin is begging you, but do whatever works best for you. Like I said, there is definitely a chance of a real good short covering rally, especially anybody who has been shorting down here in this territory. They are underwater. They are caught at this point in time. So and also, like I've said for a long time, a rising tide lifts all ships, so to speak. So I definitely think you could see this ripple across. You already saw it in after hours today for all these stocks that are in the meme basket. So the more and more these meme stock companies become profitable, like I said, that was my hope with Ape. Ape was a complete disaster. Anybody who's saying otherwise is just lying to themselves or you or anybody they can. Ape was a disaster. I saw a clip of Adam Aaron talking about how, well, we didn't dilute it right off the bat because we just said we wouldn't for like 30 days. And to me, that's crazy. Why they didn't dilute it at $10 the day that it hit the market and raised a whole bunch of money and capital right off the bat blows my mind. But once again, nothing we can do about that now. So what they need to do is when all this reverse split does take place, they do need to capitalize on the capital that they can raise. They don't need to pay off all of their debt, but they need to get a lot of it under control. They need to get their cash burn under control, and more movies that come out, that's obviously going to help with them. I personally tried their popcorn. I think it's fantastic. I was very pleasantly surprised. Everybody who I've had tried it has basically just been like, it tastes just like you're at the movies, which once again, that's the goal of it. So I love the fact that they're adding additional revenue streams, but they got to stay on top of things. We need strong movies coming out. But once again, very, 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 very happy for all GME holders, including myself. I'm going to get some shares called away. I mean, I sold 1950 calls this week. So once again, it is what it is. Okay, I'm going to lock in profit for shares that I bought down here. I got no problem with that. So would love to see a massive run continue, but you really want to keep your eye on this 200 moving average. Like I said, pretty much right where it stopped at after hours today. Let's see here. That's going to be right around 2650. That's going to be a key number. And once again, just because we're back here, just because it gets on top of it doesn't mean it's necessarily going to stay on top of it. So that's, like I said, it's just going to be a big thing that you want to watch for, as well as you've got the 200 daily EMA. So you got the FSMA, that's the black line around 2650. The 200 EMA is going to be at $25 even. So those are key levels to keep an eye on. All right. Much love, my friends. I hope this video was helpful to you. I promise you, if I'm knocking your favorite stock, it's because number one, I live in reality. Like I always say, numbers don't lie. People do. I don't do trust me, bro. I do facts and data that I can prove on the chart. And like I said, I'm not doing it to ever, hurt anybody's feelings or anything along those lines. Today was really meant to, one, super happy for GameStop holders. Number two, this should be the path that AMC shareholders want to see AMC, the company, to go down. I think we can all agree everybody would love to see a 50% move after hours on AMC with a lot of cash in the bank and with cash flow positive earnings. I really don't see how you can argue with that. That was the whole point of my tweet. I hope this video was helpful to you. Please like and subscribe, all that good stuff. And I will see you guys on Thursday. Like I said, once again, FOMC tomorrow. Please be cautious and careful if you're in any options trades. If you haven't and you're thinking about playing it, be cautious about high IV. And like I said, always do what's best for yourself, your family, and your portfolio. Much love. I will see you guys on Thursday. Have a good one, my friends.